Hello friends, welcome to Asha Wealth YouTube channel. In this video we will review the upcoming IPO of Tejas Network Limited. The registered office of the company is in Bangalore and the IPO registrars are Linked Time India Private Limited, Mumbai. This IPO opens on 14th of June 2017 and closes on 16th June 2017. It is a book-built IPO issue. Face value of the shares is rupees 10 and the price band is between 250 to rupees 257. Minimum order quantity is 55 shares and minimum application amount is rupees 14,135. The shares will be listed at BSE and NSE. The company is coming out with a issue of 3,221,332 shares amounting to rupees 776 crore rupees approximately, out of which the fresh issue is for 450 crore and the offer for sale by 45 different shareholders, selling shareholders are 326 crore approximately. The number of shares are 1 crore 27 lakh 11,605. Out of which reservation quota is QIB is 75%, NIB is 15%, retail is 10%. Now let us know about the company. Incorporated on 24th of April 2000 as Tejas Network India Private Limited, it was converted into a public limited company on 23rd of October 2002 and then the name was changed to Tejas Networks India Limited. Finally, the name again changed to the present one, Tejas Networks Limited, on 18th of March 2008. It is Bangalore-based optical and data networking products company. The company design, develop and sell products to telecommunication service providers, internet service providers, utility companies, defense companies and government entities in India and over 60 countries. The products of the company are used in building high-speed communication networks to carry voice, data and video traffic from fixed line, mobile and broadband networks over optical fiber. The company builds hardware and software products related to optical and data networking. The hardware is built using modular approach and software defined architecture allows the company to remotely upgrade the hardware with new capabilities and features. It outsources most of its manufacturing to electronic manufacturing services companies. The company has filed 326 patent applications with 198 filings in India, 87 filings in the United States and 6 filings in Europe, out of which 47 patents have been granted. The company is having its office in India, USA, Singapore, Nigeria, South Africa, UAE, Malaysia and Kenya. Now about the promoter of the company. The company is a professionally managed company and does not have an identifiable promoter either in terms of the Securities and Exchange Board of India or in terms of the Companies Act 2013. The company has come out with many further issue of capital since its inception to December 2016 between the range of rupees 10 to rupees 15,500 per share, and the total share account premium before the offer is 480 crore approximately. The company also issued bonus shares in the ratio of 1:149 on 31st of March 2007. Now come to the financials of the company. In 2012-13, net total revenue was 2749 million rupees. In 2016-17 6-month period, it was 3460 million. Total expenses was 2915 million. Restated profit in 2016-17 was 121 million. Basic earning per share was only rupees 1.87 in 2016-17. Objects of the issue are, actually this offer comprises of fresh issue and offer for sale. In offer for sale, the company will not receive any proceeds from the offer for sale. In fresh issue, company proposes to utilize the net proceeds towards funding of the following objects. Number 1, capital expenditure towards payment of salaries and wages of research and development team. Number 2, working capital requirement. And number 3, general corporate purpose. Now, let us know about the net asset value per equity share of the face value of ₹10 each of the company. As on March 31, 2016, it was ₹55.56. On September 30, 2016, it was ₹64.87. And the issue price per equity share at present is from ₹252.257. Now, about peer group comparison, there are no listed entities in India whose business portfolio is comparable with that of the company. There are special tax benefits available to the company. There are two. One is for companies engaged in the business of biotechnology or in any business of manufacture or production of any article or thing. As per section 35 2AB of the Act, the company is entitled to a weighted deduction at the rate of 200% of the scientific research and development expenditure incurred by the company, both capital and revenue in nature, except on land and building, on in-house research and development facility, it as approved by the prescribed authority. The deduction would be restricted to 150% of the said expenditure from 2017-18. For companies spending on scientific research under Section 35A and Section 35(4) of the Act, the companies are entitled to a deduction of any revenue and capital expenditure, respectively, incurred on the scientific research related to the business of the company, other than expenditure on the acquisition of any land. Any expenditure on which a deduction under Section 35AB of the Act has been claimed cannot be claimed under Section 35 or 35 of the Act. Now come to the conclusion of this issue. There are some minus points. There are a total of 34 different tax cases pending against the company involving ₹153 crore. No dividend has been declared by the company during the last 5 financial years preceding the date of this draft red herring prospectus. Return on net worth is only 2.37. Now, the plus point of the company is the company is having second place, that is 15%, in India optical networking market share of $0.6 billion. And the second one is no hefty bonus issued by the company. Third is it is a professionally managed company. So, in our view, investors may apply this issue for listing gains only. Thank you for watching our YouTube channel Asha Wealth. Please subscribe our channel, like and share to your friends, and please do not forget to read the disclaimer at the end of this video.